In this video, you are going to learn about accounting process. So this is the first thing any person needs to know who wants to start their career in accountancy or who wants to have some knowledge in accounting. They need to know this accounting process. So let's discuss about this now. So this accounting process will start with transactions. After these transactions, we need to pass the journal entries. From these journal entries, we need to do our ledger accounts. From these ledger accounts, we need to prepare trial balance. From this trial balance, finally, we need to prepare our financial statements. Financial statements, right? These financial statements, we had three parts. Okay, first one is trading account. Second one is profit and loss account. And third one is balance sheet. Okay, you have these three parts in financial statements. Financial statements includes these three. Okay, so this is the accounting process one need to follow for doing the accounts for any type of business. Okay, this is step by step. Without completing one step, you cannot go to the other step. So in manual accounting, you need to follow all these steps. If you got one mistake in passing journal entries, that mistake will carry forward to the ledger accounts. The same thing will be carried forward to the trial balance, and the same thing will be gone for the financial statements also. Okay, so in manual accounting, we need to be very careful while passing these journal entries or ledger posting. But by using the tally or any type of accounting software, you no need to follow, you no need to prepare all these things. You just need to pass your journal entries. That's it. You need to pass your journal entries, and rest of the things software will take care. So they will be preparing the ledger accounts, they will be preparing the trial balance, they will be preparing trading account, profit and loss account, balance sheet, any reports. The software will be prepared. You no need to bother about all these things. You need to consider only the journal entries. You need to pass the journal entries in the name of vouchers. I am telling you about the tally. Okay. In tally, if you just pass the journal entry with the help of vouchers in tally, the rest of the things will be taken care by tally only. So these all things will be prepared by the tally. So you need to just understand how to prepare a vouchers, how to create a vouchers in the tally. Understood or not? So in this class we will be discussing detail about the transactions. Understood or not? So what are these transactions? So what we can tell about these transactions? So let us discuss in a very simple way. Transactions means, let's take one example, any business. For example, you say cloth store or general store, anything. What they will be doing, initially they will purchase goods, right? Purchase goods, I mean stock, you can tell. So with that stock they will do their sales. So purchases and sales. Correct or not? These purchases and sales we can do in two ways. We can go with the credit purchases, okay, and we can go with the cash purchases. Credit purchase means what? Today you will buy your goods, and later you will pay your cash. Okay, so cash or credit. In sales also, for your customer, what you will do? You will sell for the cash, as well as you can sell through, one second. So sales also we can do it in two ways: credit sales as well as cash sales. So what is a credit sale? You will sell to your customer today and you will receive your cash later. Later means next day or after 15 days, after 1 month. So this type of transaction we can call it as credit transactions. If you receive the cash immediately, you can call it as cash transactions. Okay, so this cash transaction includes, we can call, even if you received through bank, I mean GPay, PhonePe, okay, or NEFT, or RTGS, or check. So you guys need to understand these are the mode of payment. Okay, these are the mode of payment. That's it. GPay, PhonePe, NEFT, RTGS, check. These are the mode of payments. But if they pay through any one of these particular mode, ultimately your money will be credited to your bank account only, right? So that's why we can call bank transactions and cash transactions. Both we can consider as cash transactions. Even if you receive money through the bank or if you money through liquid cash, okay, you can consider it as cash transaction. Okay, you need to identify clearly whether it is a cash transaction or bank transaction. Both will be coming under the same way, same thing. But the credit transaction is different, right? The credit transaction is different. Same, if you know about the purchases, the same thing will become under the sales also. The sales, the credit sales as well as the cash sales. If you receive the cash from PhonePe, Google Pay, or whatever it may be, directly that amount will be credited to the bank only. Am I right or not? So even if you receive from the bank or if you receive the cash, that particular amount is recovered from your customer. Am I correct or not? But in the credit transaction, immediately you are not going to receive your cash. So that is the main difference between these two transactions. Okay. So here purchases we are categorized into two. So credit transaction as well as cash transaction. I mean credit purchases as well as cash purchases. So cash includes bank also. For example, and sales also. What happened? Credit sales as well as cash sales. So cash sales includes the bank transaction also. Okay. Okay. Next. Here. So purchases we are doing the credit or cash. Suppose there are credit purchases. Now you are receiving the cash. Okay. Whenever you receive the cash or you receive the amount in your bank, you are receiving the transactions, right? You are receiving the amounts. So whenever you receive something, okay, then you need to identify that particular transaction as receipt. You can call simply as receipt. So or received. Or again you need to pay, right? So here for the sales you will receive the cash. For the payment, for the purchases you need to pay the cash. So here you see purchase, there is one transaction. Sales we are doing second transaction. Next for the purchases we need to pay the cash. That is a separate transaction, right? So we are paying the cash. So payment, this is one type of transaction. And receipt, so we are receiving the cash, that is another transaction. So here we have seen the four type of transaction, simple way. So purchases, sales. For the purchases we need to pay, another transaction. Next sales we need to receive the cash, so that is another transaction. Total 4 transactions we have seen till now. And next, if the purchases we don't like the purchases, or those are less quality they are having, or there are some damages, okay, so what we do return those purchases, right? So that is one part of transaction. So purchase returns. Okay. So in the same way, the customer, if they want to return the goods, so what do we call? Sales returns. Sales returns. So how many transactions? Purchases, sales, receipt, payment, purchase return, sales return. So 1, 2, 3, 4, 5, 6. Okay. Next. We are receiving the cash, right? Only liquid cash. So what we do with that liquid cash? Okay. For example, if you go to the petrol bunks, for filling the petrol, those guys will be holding the lot of cash in their hand. Have you observed any time? So what they will do that cash? They will simply deposit into their bank accounts in the next day. Okay. So depositing the cash into your own bank account, that does not make any difference, right? Suppose if you have 10 rupees in your shirt pocket, the 10 rupees if you put it in your fan pocket, will it be any difference? No difference. You have only 10 rupees. Even if it is in shirt pocket or if it is in pant pocket, no, there is no difference, right? In the same way, if you are holding the cash with your hand or the same cash you are depositing into your bank account, it makes not different. No different will be there. The same thing will be happening. Okay, you will be having the same amount. That type of transactions we can call it as contra. Okay, so bank deposit or withdrawal. Okay, bank deposits or withdrawal, you can call it as contra transactions. Okay, contra transactions. But nowadays what we are doing, we need to discuss the practical situations also. These are these bank deposits and bank withdrawals, these are a traditional way. Okay, but now during the recent times we do come across with the new transactions, like in the phone pay or Google Pay, you may be having two bank accounts or three bank accounts you may have linked, right? So from one bank account you are just transferring to some other bank account of your own. Okay, in that case also, these are the new cases we are seeing day by day. So suppose you have money in your Axis Bank, but you need to transfer it to the SBI Bank of your own. But here what happens? Do we paying the money to some other? No, it is transferring within the same accounts of you. So that is also, these are the transactions we can go with the contra. Okay, suppose if you are paying to some other outside bank, then you can go with the payment. If you are paying the cash, you can consider it as payment transaction. But now the bank is yours, the two bank accounts is yours, both the bank accounts is yours. Then what is the question? So you need to identify whether the transaction is a receipt or payment or contra. Okay, now finally you can take it as others. Okay, so how many transactions are there now? Let's discuss. See here. So purchases. Okay, so purchases, next sales, receipt or payment. Okay, payment for expenses. Okay, what you will pay? Salaries, rent. Okay, these are all the expenses, right? So outflow of cash, definitely you can consider as payment. Next, purchase returns, next sales returns, next contra, others. These others we can call as journal transactions. Journal. So we can tell it as adjustments. Definitely we need to do the adjustments in accounts. So in that case we need to use the word journal. Okay, journal. So these are the transactions we'll come across in any business. Okay, you need to identify the transactions. First of all, you need to understand the transaction, whether it is a receipt or whether it is a payment or whether it is a purchase or sales. If you understand the transaction, 50% of the problem will be solved. Okay, if you do not understand the transaction clearly, you are not able to know the treatment of accounting. You don't know how to analyze the situation, and if you are not able to understand the transaction, you can't even know a single word. Okay, so first of all, you need to understand the transactions very clearly, so then only you can select the type of voucher you need to use. Okay, so these are the transactions we need to identify. Clear? For any business, except these transactions, you can't find any other transactions. Okay, 100% you may be find many of the transactions, but most of the things, if you know these 8 transactions, you can do your accounts without any doubts. Okay, so after completing these transactions, you need to pass your journal entries, right? You need to pass the journal entries. Okay, these journal entries, for passing these journal entries, we need to know about 4 items. Okay, all these accounting will turn around these 4 words only. First thing is assets. Second one is liabilities. Fourth one is expenses. Next, incomes. Expenses and incomes. Okay, so assets always will be debit. Okay, liabilities always will be credit. Expenses always will be debit. Incomes always credit. So what is debit and what is credit? Let me tell you. See, so if you have one paper, right? So if you fold this paper in the center, you have 2 parts with this paper, right? So this is left side one and this is right side one. Okay, what we are telling, this is left side, this is right side. So if I ask you what is right and what is left, what you will tell? Nothing, right? We can just show this is our left side and this is the right side. And in the paper, if you say this is the left side and this is the right side, right? Now in the same way, in the accounts also, we do prepare the ledger accounts. Okay, we do prepare the ledger accounts. You have one format for the ledger accounts, right? We can call this format as T format. Okay, call this format as what? T format. Okay, here this side what? Left side. This is right side, right? This we cannot call it as side, left side or right side. We call this as debit side. So DR, credit side CR. Okay, debit we represent as DR and credit we represent as CR. So this is debit side and this is credit side. Understood or not? And here if you put any name, we can call this particular account as ledger account. Okay, if you write here Hari account, if you write like this, we can call this particular, this is ledger account. Okay, this is ledger account. We can call this particular account as Hari ledger account. Okay, Hari ledger account. Okay, Hari ledger account. If you write this as salary, here name salary account. So this part is known as salary ledger account. So this is the name of the ledger account. Here you need to write this is debit side and this is credit side. Okay, now we understood, right? Debit side or credit side. So if you have balance on the debit side, this particular part you need to identify. If you have this particular ledger balance on the debit side, that means closing balance. Closing balance on the debit side, we can call that particular balance that ledger is having. If you have credit side your balance, okay, then you have credit balance. Then you have the credit balance of this ledger account. Now here you see assets will be having always debit balance. That means what? Assets ledger will be always having only the debit balance. Okay, liabilities ledgers always will be having only the credit balance. Expenses ledgers always will have only the debit balance. Debit balance means what? The balance it should be showing on the debit side of the account. Then we can call it as debit balance. Clear or not? So next, incomes will be having always the credit balance. Okay, is it clear or not? Okay, so now we understand the ledgers, right? Now some detail we can go with the ledger account. Clear? Here you see, you can understand clearly. So here you see, so from the journal entries, what we will be doing, we will be posting. So ledgers, okay, these are the journal, from the journal entries we will be doing all these things. So here we need to do the totals. Okay, so here we need to do the totals. These are very small from the journal entries we need to do all these things. So you need to do the totals. Here I am not going to explain the ledger accounts. What I am trying to tell you is how to show the closing balances. Okay, how to identify the closing balances, and I am showing the same thing. Now you see, so for example, salary payment is an expense, right? So expense for expenses we will be having what? For expenses you have debit balance. Okay, so how to identify? So here you see, so salary is an expense. We will be having only the for any particular year you need to set up for that particular year only. You cannot carry forward the expenses and incomes for the next year. Okay, so we'll take any asset. We'll consider any asset account. You see, okay, for example, you say furniture. Okay, you have furniture, right, as an asset. Let's discuss what are the assets, how to identify the assets, liabilities, everything we can discuss later. But you need to identify how to identify the ledger balance. Okay, so you have furniture, right? So furniture you will be having closing balance. What? How to write? By balance C by D carried down. So here you will be having the closing figure. Okay, by balance carried down. Now what we need to do here? Here you need to bring the closing balances. So every year 31st March we need to close our accounts. Okay, every year we need to close our books of accounts, right? So here we have closed, carried down balance with this account is closed, and this particular year we have closed the account, but we have balance left in that ledger account. The leftover balances we need to carry forward for the next year, right? So again you need to bring here. Again we'll start our accounting for the next year. So this B by D balance we need to brought down here. So again to balance B by D. the same amount you will do, you will carry forward for the next year, and you will continue your accounting for the next year. So this is nothing but the closing balances, and these are nothing but the opening balances. Okay, nothing here, simple. What is the closing balance and opening balance means? See here, if you are maintaining some shops, okay, after closing today, you will close the shop, right? By the end of the day, you will have some cash in your cash box. Okay, what you will do with that cash? You will count and total. You will count the total amount and you will write it somewhere. And tomorrow you will be counting including with this amount, right? So yesterday leftover balance is 5,000 rupees. So from today you have collected again 6,000 rupees. So how much cash you have means what you will say. So yesterday's amount 5,000 rupees. So today amount plus 6,000 rupees. So opening balance plus today's transaction you will be adding, right? That is the thing we are doing here. So yesterday's closing balance is tomorrow's opening balance. Am I right or not? So this is the daily transactions I am telling you. But for the ledger accounts, for closing the books means what? Year you need to do. So these are the opening balances and these are the closing balances you need to identify. Okay, these are the ledger accounts. Clear or not? From the ledger accounts, we need to identify our trial balance. Okay, so for ledger accounts, we have some format now. For trial balance, we don't have any format at all. Okay, so why we need to prepare our trial balance? Okay, why we need to prepare means, if you have any mistakes in passing the journal entries or in preparing the ledger accounts, you will have chances of identifying here if there is any mistakes. There are some type of mistakes, let me tell you. You see here in the journal entries you will be having some debit and credit. We do follow our double entry accounting system, right? For every debit entry there will be corresponding credit entry. Definitely you will have two entries for any transactions, debit entry as well as credit entry. So debit and credit always there should be matching, right? If there is any mismatch, that mismatch you can identify in preparing the trial balance. Okay, here the debit and credit, if there is any mismatch, we can identify in the trial balance. So that is the main reason we do prepare the trial balance. From the trial balance we will be preparing the financial statements. Clear or not? From the preparing the financial statements, what we do? Let me tell you the formats of financial statements. Okay, so trading account, right? Trading account, trading, we are calling this as account. Please remember, we are calling this as account. So trading account, if we call it as an account, we do have debit balance and we will be having the credit balance. So debit balance as well as the credit balance. Okay, so after preparing the trial balance, we need to prepare our profit and loss account. Profit and loss account. Okay, profit and loss account. So we are calling this as account. So for this we need to have debit balance, so debit side and credit side, and finally we need to prepare our balance sheet. Okay, what? Balance sheet. Here we are not calling this as account. Okay, this is not an account. The balance sheet is a statement which is showing our assets and liabilities on particular date. Okay, on a particular date means what? We will be preparing this balance sheet on 31st 3 2000 year, whatever year it may be, we will be preparing our balance sheet as on 31st March. Okay, so on the 31st March, what is your assets and what are your liabilities? So these you need to identify through your balance sheet only. Okay, so these are the assets you are having as on the date, and these are the liabilities you are having as on the date. So the assets should be always equal to the liabilities. Liabilities, here you will be having, capital. So assets is equal to liabilities plus owner's capital. That equations we will see later, but now here you need to identify what is the trading account, what is the profit and loss account, and what is the balance sheet. Okay, here in trading account already we discussed expenses always will be having the debit balance, right? So here you can debit side, what you will get? Expenses. Credit side, incomes. Okay, in the same way profit and loss account also, in debit side we do have expenses, in credit side we do have incomes. So let me ask you one question. If you see clearly, the trading account and profit and loss account looks like the same. See here, trading account and profit and loss account, they both look same. Here you have expenses, here you have expenses, here you have incomes, and here also you have incomes. So if you have the same thing, so what is the reason we are preparing the trading account separately and profit and loss account separately? Is there any reason? Okay, is there any reason? Yeah, definitely you have some reasons. For anything you are doing in the accounts, there will be definitely one reason behind this. You need to identify that particular reason. That is the concepts you are learning. Okay, here in the trading account, you call these expenses as direct expenses. Okay, these incomes we call it as direct incomes. Okay, direct expenses and direct incomes. In profit and loss account, these expenses we can call it as indirect expense or indirect incomes. Now you find some difference, right? These are the direct expenses and these are the direct incomes, and these are the indirect expenses and these are indirect income. Clear or not? Understood or not? Okay, so now let me tell you these direct expenses and direct income. What is the difference? Both are expenses only, but there is a difference for direct expenses and direct incomes, and indirect expenses, indirect income. Definitely there is a difference. Now I will tell you the clearly. You see, for example, suppose there is one manufacturing unit. Suppose let us say this chair. Okay, suppose this chair is there. Okay, you need to manufacture this chair. For manufacturing this chair, what we need to have? We need to have wood. Okay, iron. Next, cushion. Next, paints, labor. Okay, these are all the raw materials we require. Okay, raw materials we require. After purchasing these raw materials, we need to bring these raw materials to our factory. Am I right or not? So for bringing the raw materials from supplier place to our place, we need to incur some cost. That cost is nothing but transport. Okay, now we had the transport expenses and the raw material, we brought it to the factory. Then we need to incur some labor cost. We need to hire the labor for doing this material, for doing this chair, right? So this is the labor expense. Okay, so and in factory there should be power or electricity charges. We can call it as electricity charges. Okay, if we have the power only, the machines we can run. Okay. Now these are the expenses. These are the expenses. So okay, let me continue here. So now see, power. We had power and all, and we have produced, and the chair is ready. Okay, the chair is ready now. We need to do some packing work. That means we need to wrap it, right? So packing work we need to do. So packing, and we need to send this particular item to our customer. So again transport, you can say. For looking after all this work in the factory, we should have supervisor. Okay, for doing this billing, for invoice raising, you need to do some accounting work, right? Accounting work or office work. We should have some office expenses like water, office power bill, next stationery, all these things, right? Stationery, watchman. So all these things you have, right? Expenses. So these all are expenses only. So all these things are expenses only. Clear or not? All these things are, we can consider as expenses. Now here from these expenses we need to identify what are the direct expenses, what are the direct incomes. So here these are the raw materials, right? Okay, now let me tell you very clearly and understand very carefully. Based on this only you can create groups and ledgers in the tally. Okay, this topic is clearly linked with the tally. Now you understand, you see what are the indirect expenses, what are the direct expenses. Clearly I am telling you, you see. So these are the raw materials, right? For producing the chair, for manufacturing one chair, we need all these things, right? Suppose if you don't have wood, if you don't have iron, or if you don't have cushion, if you don't have any of this material, can you able to manufacture this particular chair? Can you able to manufacture this particular chair? No, we cannot manufacture, right? If you are not able to bear this raw material as an expense, you are not able to put this expenditure, you cannot manufacture your chair. If you don't manufacture your chair, can you make any sales? Can you make any profit? If you don't have any profit, if you don't have any sales, what about your business? You can't run your business. So this raw material expense will be directly affecting your business. Okay, directly affecting your business. Then we can call it as direct expense. The expense which affects our business directly, we can call those expenses as direct expenses. Suppose you say the transport, you see here the transport means from the supplier to our location. We can call this as carriage inwards in our accounting language. Okay, suppose you don't have money for the transportation, for bringing the raw materials to our factory. If you don't pay the transport cost, so what will happen? They don't send you the material. If you don't pay the transport cost, what is the reason? Why they will be sending you the material? They don't send. If you don't get the material, no production. No production means no sale. No sale means no profit. No profit means no business. Clear or not? So transportation is a direct expense. It will be directly affecting our business. So next, labor. Okay, labor. Even if you don't pay the labor, you don't have money to pay the labor, whether they will come? No, they don't come. If they don't come, I cannot make the chair, right? So definitely the labor is to come. They must be preparing the chair. So if for maintaining the labor, you will be having some expenses. You need to pay the wages and all. So that is a direct expense. If they don't do the work, you cannot have your sales. You don't have the production. You cannot have your sales. You don't have the profit. Clear or not? If you don't have the profit, no business. Okay, next, factory power. If you don't pay the electricity bill, what they will do? They will cut the power. Electricity department will cut the power. If you don't have the power, what happens? No production. You cannot run the machines, no production. So it will be directly affecting your business. So you need to identify first whether it is an expense or not. If it is an expense, then you need to identify whether this expense is directly relating to the business or not. If it is directly relating to the business, then it is a direct expense. Where it will be going? It will be going to the trading account. That's it, simple. Clear or not? Okay. Now here you see the packing charges. Next, you have till here you have manufactured your chair. Okay. Here the packing charges, right? Packing charges means you need to do some packing for the product, because it should reach safely to the customer. So that's what we are doing the packing. Now let me tell you one example. You can tell this as direct expense. So definitely we need the packing, sir. Many of your students may be knowing the you can order from Flipkart, Amazon. If you order one product, by reaching you that particular product, the box may damage, right? But the inside item is working good. So what you will do? Definitely you will return, or you will keep it with you. So that depends upon you. If you want to store with the box, you may return if you don't like the product. But as far as these practical scenarios, suppose you have ordered some 50 chairs to one factory. Okay, to one factory. It will be taking nearly 4 days for manufacturing those 50 chairs. Okay, after the 6th day, you have opening in your office. So what happened means, these 50 chairs they are manufactured. Okay, till the last minute the manufacturing is not completed, but the chairs are ready. The packing is only left. That wrapping, the covers will be there, right? That they need to wrap those covers. That's it. Okay. Now tomorrow morning is your office opening. So what you will do now? So you will be asking, definitely, sir, I need to wrap those covers and you need to send me, that's it. Or they say, sir, wrapping is not possible by tomorrow. If you want, you can take the chairs. Now what you will do? So anyway, these are the new chairs. You need to open your office with full furniture, right? So what you will do? My case, I will just definitely without wrapping only. Okay. So what I am telling is, this is optional, but that is mandatory. Both the case will be having. See, definitely you need the packing, but in certain cases, if there is no packing also, we can accept the product. Clear or not? But there is some importance for the packing. So in this particular scenario, whether you can sell the product with packing as well as without packing also, you can say. So if there is a scenario like this, with or without, okay, then we can identify this as indirect expense. Okay, indirect expense. Clear or not? Indirect expense. Next, transportation cost. Okay, transportation cost. So here you see there is one transportation cost. Here this is one more transportation cost. Here the transportation cost means we are bringing our raw material to our factory. Here the transportation cost means from our office, from our factory to the customer. So normally who will be paying this transportation cost? Customer will be paying this transportation cost. Suppose if you are paying this transportation cost, that is your option. You can give the free delivery. Free delivery means what? For customer it is a free delivery. For you, you will be incurring some cost. You may give with free delivery or without free delivery. Clear or not? So it will be directly not affecting business. Suppose you are not giving a, suppose if you buy any TV in the shop, what happens? If there is a free delivery, shop person will send you, or if there is no free delivery, you will bring your TV to your home. Clear or not? That depends upon the offer, right? So here the transportation cost, if there is a transportation cost, it will be indirect expense. Or next, supervisor. Suppose supervisor is not coming to the factory. Whether you will stop your production? No, we don't stop our production. Correct? So supervisor is important. Clear? Why? Because in order to look after all the operations, right? So supervisor is important. But without supervisor, we cannot run the factory, means no. So this type of expense is known as indirect expense. Next, water. In office, there is no water can. Water cans are not available. Whether you can't run the factory? No, we can run the factory. So water is important for the staff, for drinking water. So definitely these are important to the business, but these are not mandatory. So these type of expenses as indirect expenses. Now I think you clearly understand what are the direct expenses and what are the indirect expenses. Now watchman also, what is there? Even if we come or won't come also, we can't stop our business, right? So watchman is important for security purpose. If you don't come, what will do? We'll close the business or what? No. So this is an important expense, but it is not mandatory. So these type of expenses we call it as indirect expenses. Now you clearly define what are the direct expenses and what are the indirect expenses. Direct expenses which are directly affecting our business. Indirect expenses means those are important to the business, but those are not mandatory. Clear or not? So we can easily identify as direct expenses and indirect expenses. Clear or not? Okay. So here you see. So direct expenses and indirect expenses. So direct income. What is the direct income? For any business, sales is only the direct income. For bookshop, selling of books will be the direct income. For cloth store, selling of clothes will be the direct income. For any business, the purpose of what they are doing for the generation of income, the main product which they are selling, the revenue which they are getting from the selling of main product, that income is the direct income. If they don't sell the product, what happens? They don't have the business. For bookshop, if they don't sell the books, what happens? No sales, no profit, no business. So main source of business, main source of revenue will be the direct income. Okay. Now what is an indirect income? Let me tell you. For the same bookshop, that person, that owner is doing some recharges also to the mobile. They will earn some commission. So if they don't have commission, if they don't have this indirect income, whether they will stop the business? No. This is additional income which they are getting. So all those other incomes other than salary we can consider as indirect incomes. Clear or not? Indirect incomes. These indirect incomes, interest, bank interest, commission, discount. Okay. All these things we can consider as indirect incomes. So now clearly understood, right? So expenses or incomes which are directly affecting our business, we can call it as direct expenses or direct incomes. Okay. Expenses which are necessarily for the business but they are not mandatory, we can call it as indirect expense or indirect incomes. Clear? Now from the direct expenses and direct incomes we can get our profit. We call this profit as gross profit. Here we will get the gross profit. From the incomes, if we reduce our expenses, we will get the profit, right? We call this profit as gross profit. Clear? And here we will get the gross profit here from the gross profit plus other incomes. If you reduce our indirect expenses, we will be getting the net profit. Okay. So what is the difference between gross profit and net profit? Clear? Let me tell you, see. Now we are seeing the difference between the gross profit and net profit. What is the difference between gross profit and net profit? See here. If you see the gross profit, if you see the net profit, simply we can tell. So direct incomes minus direct expenses, we get the gross profit. So direct expense, here you see. So direct incomes minus direct expenses, we get the gross profit. direct indirect incomes minus indirect expenses, we get the net profit. No, that is not the case. That is actually the theoretically, practically that is correct, but you need to understand the reason behind this. So here you see, if you observe all these expenses, if you observe all these expenses which I have discussed earlier, you can see some common point. Here you see here the wood, iron, cushion, paints, labor. Now you see, wood, you cannot define your price, right? You can purchase from the market at the available price in the market. Am I right or not? Clear or not? Suppose 2 years back, if you purchase that particular item for 100 rupees, now the item may be 200 rupees or 250 rupees. You cannot tell, sir, before 2 years I paid only 100 rupees, now also if I pay like this, who will give you? No one will be giving, right? So you will be purchasing these products, these are all the raw materials at the available price in the market. You cannot control those prices, right? Whatever the available prices in the market, you have to purchase with that price only. Okay, the transportation cost also, because transportation cost, due to increase in petrol prices or something, your transportation cost also will be increased. Okay, can you control those costs? No, we cannot control those costs. You need to go with the market prices only. Even the labor also, over the period of time, the labor price also will be increased. So if you observe clearly, the expenses which you are getting in the trading account, these are market driven. Okay, these are market driven. You cannot control those prices. Okay, even the sale price also you cannot control. Why? Because if the market price, your raw material price increases, your expenses increases, means definitely you need to increase your sale price, right? If the market price increases, raw material price increases, definitely you need to increase your sales price, then only you will have the profit. Clear or not? But how much you will be increased, that's up to you. But what I am saying is, if there is increase in market price, raw material price, definitely you need to increase your sale price in order to maintain your profits. Clear? Yeah. Now what about this profit and loss account? Now you see, indirect expense means, here you have some expenses, right? Transportation cost. See here, packing charges. I'll tell you clearly. See, definitely there you need to pack your products, but how you will be packing, that will be in your hands. If you are wrapping very neatly with high quality cover, you will have some expense. Or if you wrap the shares with normal quality packing, then you have some other expense. That depends upon your intention. That will be in your hands, whether you can increase the expense or you can decrease the expense. So see here, transportation cost. If you are offering the free delivery to the customer, you are increasing your expenses. Or if you do not offer the any delivery, you will be having less expense. So this is in your hands. So you have 2 or 3 supervisors. No need of 2 or 3 supervisors. You can have only one supervisor. Before you are paying 10,000 salary, now if you have pay 5,000 salary to the supervisor, you may get some persons outside. So you can reduce the expense. Office expense, office rent, for example. Now you are paying rent 50,000 rupees per month. So you don't require this much space. If you move to some other place, you may pay 20,000 as a rent. So that will be in your hands, right? So these are the indirect expenses which you can control. Okay, so here you see, so the expenses which you are getting in the trading account, which you are updating in the trading account, those are not in your hands. Okay, these are market driven. But in the expenses which are getting in the profit and loss account, I mean indirect expense, which you can control. Okay, that means what? Net profit you can control. If you want to increase your profit, you need to reduce our expenses. That you can do it. Clear or not? Clear or not? So this is the main difference for gross profit and net profit. Okay, if you want to consider the industry, so in industry average, in any industry, you can say, suppose rolled gold, imitation jewelry industry, the overall the industry, the gross profit ratio may be the difference. Slightly there may be points, may be change, but if you compare shop to shop, so shop 1, shop 2, shop 3, shop 4, if you consider shop to shop, the gross profit ratio may be the same, but the net profit will be definitely different from one to another, net profit ratio. Because if you purchase the mobile in a very big showroom, definitely they will incur some expenses. The same mobile, if you purchase some compared to the small shop, they may reduce the price. Why? Because there are some shop expenditure comparing for these two shops. If you buy in the showroom, definitely there will be increase in the price because they have to incur all those expenses. But if you purchase the same mobile in very small shop, they don't have that many expenses, so they can give at the low price. Clear or not? And finally, this net profit you need to add and bring it to the balance sheet. In the balance sheet, you have fixed assets, current assets. Next, liabilities, capital, long-term liabilities. Long-term liabilities, current liabilities. Here, finally, the balance should be tally. Okay, guys, these are the basic concepts you need to understand. You need to learn if you want to enroll as an accountant, if you want to join as an accountant, or if you want to have some knowledge for the accounts and all, you need to have these basic things in your mind. So if you have any doubts in this session, you can raise a request in our website, or you can join our doubt solving session. Okay, thank you.